Dell had a really good quarter. I mean, listen, when I look at the optics, it was a very similar, it's somewhat of a similar story to Lenovo, where if you looked at revenue being down 11%, you're like, oh my gosh, a train wreck. And what you have to do is you have to pull apart the different businesses, right? That's really the only way to look at it. So ISG, which is data center and edge, up 7% with record profitability, record storage revenue of $5 billion, up 10%. Daniel, that is hard to do in Dell has the world's largest storage business, flat out. To go up that much is hard. And also, when you look at where Dell's sweet spot is, which is, I would say, high performance up to even the giant systems with Isilon, a little bit less of the low end storage. That's really, really hard. Servers and networking were up 5%. Again, not as high as the percentages as we have seen from some other companies out there, but still it's up there. And if you look at, again, storage growth, fourth consecutive quarter of revenue growth, which I was a little concerned, maybe 3 or 4 quarters, but it seems like Dell, particularly, this is where I think they're making their play, is in the re-architected mid-range of it. So if ISG was so great, what happened overall? Well, it's all about PCs. And let me step back. Whether it's Canalys or IDC, the market's down between 30 and 40% on a unit basis. And so declined the PC business at Dell, that was down 23%. There were still some high points, just like we saw with Lenovo that kept share. You had Dell gaining 140 basis points of commercial PC unit market share. And it is crazy. It seems like every quarter we're talking about share gains that Dell's having across commercial. I attribute that to a good strategy. I also attribute that to making the right trade-offs as it relates to its product, but also a sales motion in the small business that they've run effectively, where they can be a solution provider all the way from PCs to small business servers. So overall, top line numbers not great. You had to peel back the onion on the quarter to get to the high points. I don't see any of the challenges here as being self-inflicted at all. It was all about the market. Final thing I want to say is I want to give a tip of the hat to retiring CFO Tom Sweet. I spent a lot of time with Tom Sweet over the past decade. I think he came in right around the EMC time frame. And what I appreciated, I think most about him, if I ever said something he didn't agree with, he would say it. And it wasn't even, sugar coated. I love that economy of speech. I love just getting right to the point. And Tom did some great stuff. I mean, heck, we're going to go private. We're going to buy a company. We're going to go public again. We're going to, get our debt from junk status to AAA. He was a big architect behind that.
Yeah, you covered a lot of ground. And I want to also say I had regular quarterly meetings with Tom and appreciated the work he did very much, and looking very much to working with the incoming CFO as well. Always enjoyed my conversations with her very much. The overall performance of the business we knew was going to be bifurcated. We knew PCs were down. We knew infrastructure should be robust. And we got really what we expected. You look at the overall market condition, Dell's PC business, really held up against the backdrop of the overall market. I think it was down, was it 11? I'm trying to pull the right number. No, sorry, 23%, right? And then, what was the overall 2016? So
well, the overall revenue was down 11%.
No, I mean the market down for PCs this quarter, wasn't it around 16? That's one number.
28%. I believe Canalys had a higher number.
So. Okay. So I'm all over the place. So let me start that over again. PC market down 28, CSG down 23. So it means the company performed better than the actual overall market condition. Pat, I am exhausted of talking on the PC market. Look, that market did extraordinarily well for a period of time, and anybody that sees it as anything other than pull forward of purchasing is misunderstanding. We are going to have some innovation, some disruption, whether that's on-device AI, whether that's new formats and form factors and screens, whether that's lighter, whether that's connectivity, whether that is going to be, all-day battery life. There will be things that will drive the next wave of significant purchasing, and the PC is much more resilient than anybody ever wants to give it credit for. I don't care how big our phones get. People want to work on PCs. Dell, this is a goalie. And so this is a goalie for every company in the space. As long as Dell is outperforming the overall market size and shape, I think they're doing a good job executing. The company always really does do a good job executing. I'm glad that the company is diversified with ISG. I'm glad the company has its play. I'm continue to push the recurring revenue. It's going to be interesting under new leadership in the CFO if they're going to get more aggressive on talking recurring revenue, and specifically Apex. You heard us talk about HPE and GreenLake. Dell's business is so much larger, though. I think there's a concern as a percentage of the overall revenue if they start saying like, hey, we're at $1 billion in recurring, people are like, that's 1%. That's not very much. But it is important to say, hey, we're getting traction with hybrid cloud, multi-cloud, data services, protection, backup, security, devices as a service. So how they're going to be able to kind of continue to explain that is going to be something I'm going to be looking at very closely. But Pat, kudos. I mean, record infrastructure revenue up 12%. Strength in servers, strength in networking, strength in storage. And they're gaining, by the way, Pat, they're also gaining commercial PC market unit share. So even despite the down, they are doing well in certain spaces. So, where do they sit? Look, Dell, Pat, they've had the same slide for a long time, the storage leadership and then the server PC. They literally have 2 slides in their deck that talk about all the spots that the company is number one. I would read them all off, but honestly, we don't have time. We're going to run out of time on the show. So the point is the company's well positioned. The company is diversified. The company has had consistent leadership. The company is struggling with short-term revenue growth because the PC market is in a difficult spot. But having said that, the pivot to software, the pivot to security, the pivot to infrastructure as a service, multi-cloud are all in their wheelhouse. So I'm pretty confident long-term, the company's valuation will hang in there. And by the way, they never value, much like HPE, very high. So as that recurring revenue valuation as the PE, never very high. So I think as the company continues to be able to roll out more of the subscription services like HPE, they should be beneficiaries. And when the PC comes back, they will be certain beneficiaries.